Hi everyone, welcome to another episode of Going Elliptic with our Chartered series, where we like to analyze the markets and try to make sense of really what's going on quite generally across the space of crypto. And yeah, without hype, but it's also without financial advice of any kind. This is all for educational purposes. So we hope you learn something from today's session. Hey Shanky.
Hey Paul, how are you doing?
Yeah, pretty good. Been looking at the charts a little bit more this morning. It's an interesting or unexpected kind of uptick there, potentially reversing some of the bearishness we've seen throughout the course of the week.
Yeah, big strong green for sure across markets today. So yeah, we can pick that up and look at where the market's heading.
Excellent. And I know, yeah, we'll jump into a few of the other assets as well, some NFT and some DeFi tokens, but really I think what everyone wants to make sense of is the majors. You know, it's kind of what's happening in the world of ETH and BTC.
Yeah, they sort of, lead the pack. And so as it always happens, it starts there, and whatever's going on in the world of BTC and ETH gets replicated, right? Copied across the markets, one way or the other. Sometimes one or two fall offline, but it's largely along those lines. It's a highly correlated market in that sense.
Yeah, it was also interesting when we had Mike Van Rossum and Josh Olszewicz on the show last week. They were talking about the correlation between the majors and VIX, so volatility index, and generally that the correlation was the higher the volatility, the worse that was for the long-term trend for Bitcoin and ETH. That's something I'd love to dig into a little bit more, if not in this episode, in one of the future ones.
Yeah, 100%.
Nice. And yeah, also little shout out. I know you've been posting some more videos on TradingView, and then we're tweeting those out from our @Going Elliptic and compiling those also as part of the Going Elliptic newsletter on Substack. So if you're tuned in today and you want to see a little bit more at perhaps a slower pace where you can digest it all, do follow us, like, subscribe, and we'll get you more content so you can make sense of the markets.
Yeah, and also a request to our listeners. We're very thankful. A lot of good feedback over the last few weeks. As you all know, we started only earlier this year, but we have gathered some momentum and we're happy about it. The idea is to bring some, good, useful content. We did see our Twitter follower numbers go up, which is good. It allows us to then reach you and let you know as newer content is available. So if you haven't already followed us, please go and follow us right away. Also subscribe to our newsletter. We'll be bringing out more of those. And then also do follow us on YouTube. We are very close to that initial 100-odd followers, which allows us for a custom link, and then it becomes easier and more memorable for everyone as well. So give us a couple of subscribes there, and I think we're all set. So thank you for that in advance.
Yeah, no, and it has been a pretty interesting journey so far. I mean, we joined right when there was already the hype or the top of the market, and now bearishness. But hopefully, this is all content that helps people whichever direction the market's going. So,
absolutely, yeah.
Cool. Let's jump into those majors.
Well, let's do it. Okay, as usual, let's start with BTC. So just a few reminders before we look at the more recent price action. We obviously saw the all-time high close to 64,000. We've discussed this in the previous episodes, how the price struggled around the 60,000 mark. I think anyone and everyone who follows crypto knows the big crash that occurred in May. And then, of course, the big topic has been, where is the price headed, right? Are we going to crash and burn? Is that going to bounce off some particular support level and we are back onto the big bull run? That has really been the focus of most of the crypto conversation over the last month or so, ever since that sharp correction. So with that in mind, I think there are a few things that we have been following up week on week, and I think we are happy that our analysis has been consistent and our analysis has been useful and also fairly accurate, right? So I think in that same spirit, we will keep using the technicals, we'll keep digging in and try to give unfiltered, good, straight up analysis as much as possible. Now, if our listeners may recall that we had mentioned that this 45,000 or 40 to 45,000 area had become an important area of value. We saw that this region essentially between, to be exact, 40,475, roughly about 40,500 and 43,500 had become a very strong area of resistance. And after the drop, there were a few attempts to breach it or get close enough to it. We saw one, just a couple of days after the big fall, a couple of attempts there. We saw another one, not as far up there, but kind of an attempt to pull closer. And then it did seem like in the third and fourth attempt, if you may, which were just adjacent to each other, that we were now getting ready to breach that and perhaps get into this area of value and, continue with the bull run. But unfortunately, that didn't happen. And as it so happens, it actually pulled the price all the way down, right? And now we are in this second leg, if you may. We had drawn some of these price points with price tightly tracking between 37,000 and 29,000, or rather 34,000, although with some wicks going all the way down closer to 29,222 that we had predicted. And now it looks like we are in the lower leg of this compression. So that is certainly happening in the world of BTC. There was also, of course, the ceremonious death cross, if you may, right? Something that was inevitable, but something that was talked about quite a bit. When 50 MA goes under the 200 MA, in this particular instance, we of course like to track the EMA, the exponential moving average, as it just gives the more recent price points a little more weightage as it should be, right? It is not completely lagging. And we saw the EMA also cross, earlier last week, essentially, on 23rd, that time frame. And now we are done with the death cross, right? So the bearish confirmation is in, if you may.
Yeah, and definitely it seemed to have been priced in a little bit leading up prior to the death cross, right? It was going to happen. It didn't need to move the price a lot lower down, but definitely did need to be kind of acknowledged there in the market, I guess.
You're 100% right. And I think both you and I have been saying this a few times, that there should be no surprises when the death cross really occurs. It will be a no ceremony, primarily because it's already priced in, right? It's sort of expected, it's inevitable, so nobody's, not sort of thinking about it already, right? And although it was discussed quite a bit, and crypto Twitter loves to make noise around those kinds of, important events, but from a market structure or price action standpoint, it was a no event. Nothing happened when it really happened, right? So yes, that's true. Couple of things here to see. Again, I'm more of a believer of looking at the price and trying to understand and react to it, rather than try and predict or try and add in our own sense of hope, right? We are here to analyze the data, not try to predict that we will know what the data will look like in future. So I think the important thing here really, Paul, is if you look at this attempt to break 40,000 or break this area of value, we saw that it could not hold there and fell very sharply, right? And so just to sort of go back and look at these points of support and resistance, and if you just sort of correlate it back into the sort of theory, the underlying theory of technical analysis, what it really implies is that this is definitely a big area of resistance, at least at this point in time. And in other words, the area of resistance really means that at this point in time, the sellers come and step in, and there aren't enough buyers left behind who would continue the fight. Because every day, every price point is essentially a negotiation between buyers and sellers, right? You could think of it that way. There's some people who are trying to push the price up by buying and saying, well, this is discounted or cheap. And then some others who are thinking, hey, it's already overpriced and I need to go take profit, right? And I think what has happened is it's very clear that the sellers really stepped in, and the sellers, in fact, pushed it all the way down, further down than where it had been, right? So it had been at about 34,000 level, and it pushed it way further down to a price point closer to the 29,222 level, and then of course brought the whole tight range itself to that slightly lower band of between 34 and 30, right? So that's where it pushed the price down. Again, it should not be surprising at all, because most buyers would have been spent. It's not like people have infinite amounts of capital, right? I mean, you saw all these big green candles, and so people tried to buy with the capital they had. And perhaps some of these folks also either lose money or want to wait and watch. And so, they get into that pattern. And you start seeing people leaving the market essentially, right? Not everyone continues the fight, right? At some point in time, they sort of say, okay, let me try and figure out what's going on here before I go and continue the battle, if you may.
And also interesting from that supply side is the miners have been selling a lot less than they were, say from January, February, March. They were selling a lot more Bitcoin onto the market at those high prices, and that's certainly dried up. So I do think that does change that equilibrium, as you say, the negotiation between buyers and sellers on a daily basis. There is less volume from miners, so the volume is mostly coming from, say, institutions or larger holders who might have to divest or change their capital allocations.
100%. Yeah, absolutely. And I'm sure some are just taking profit and some are just not seeing this play out as they had expected with their own respective trading strategies and just exiting for the moment, right? So all of those may be true, for sure. What we do also see is that there is definitely still support at that 30,000 or 29,222 as we have drawn around here, because every time the price has come close enough to it, we do see a bunch of green candles, right? We saw these smallish green candles. In fact, I could remove this since we're already done with this, but these green candles push the price back up, at least up to 34. It could not push it way further up, but at least brought it up there. And then, of course, the sellers stepped in again, and saw a similar candle like we saw earlier. They pushed it down. But then again, the buyers felt like there was still a discounted price, and they've given it like a second attempt. The key part here really to understand is how long does this go on, right? And what's going to happen? What's the end game here, right? The way I think through this market is, we saw some movement like this in the past as well. I mean, BTC went through this process here, and there was a period. Let's just see how long was it. So if you look at the same price level, we saw it from here roughly, right, when it entered to when it left this. Where did it leave? It left around here roughly. So that was like 37 bars, almost 37 days worth of tussle. Of course, there were some when it breached higher up, but eventually kind of went down in this range. So even on its journey up, right, during the bull run, we saw 37 days of sort of sideways range bound movement, where BTC was trying to figure out, does it go up higher or not, right? And so I think it'll be interesting to see how many have we done now. I would think just from the look of it, we're probably close to it, but let's just see. Let's say after the drop somewhere here to here today, we are about 38 bars. So it's exactly the same. It's very symmetrical, right? We've spent about equal amounts of time now in that range on our way up as right now on way down, right? So I think that this tells me, at least at an intuitive level, that perhaps we will see some interesting price action over the next week, right? What could happen is that either we'll see a reversal, somehow the market sort of gets bullish again and it picks back up and then tries to break through this area of value one more time, right? And maybe succeeds this time. There might be that attempt. Or we might end up seeing a little bit more sideways, but beginning to sort of correct downwards because those attempts have failed, right? So it won't be like a massive crash. I don't know, of course, how that could play out, but it's more likely that it might kind of keep struggling at that lower levels for a bit.
Yeah, and definitely one of the on-chain metrics that's getting a lot of discussion at the moment is the hash rate difficulty adjustment for Bitcoin miners. That's going to be roughly minus 20% at the next adjustment, which is almost unheard of. It's one of the hash rate has more reliably gone up than the price has. It's always this competition for your share of the network rewards, block rewards from Bitcoin, but obviously a lot of mining equipment being shut down in China, moving to other markets. I'm not as bearish on that news as potentially what I'm seeing in crypto Twitter, simply because there are still sufficient miners around the world, and that difficulty adjustment, they become more profitable. So it's a good time to be a non-China located Bitcoin miner, and they'll continue to do that job of securing the network. In fact, they can do it faster with the lower difficulty. So yeah, I think it's one of those things where it might spook the market and might cause another drop down, but it should already be priced in, and it should be slightly bullish that we're going to get a greater decentralization of mining in Bitcoin as a result.
Yeah, I think you have a valid point there. In fact, I feel that a lot of this news that is being brought up as a rationale for the price action is probably more post-price action. In fact, a lot of this news is just confirmation for the story that you want to push, right? So since the price has corrected sharply, and I know a lot of analysts and news media and crypto Twitter is trying to figure out the reasons for it, like why has it happened? And obviously, simultaneously at the same time, a few things happen. There's definitely the Elon Musk effect, and then there is the China effect. And I think that it's been attributed wholly to those. Now, I must say that there's definitely a part in it. There is no two ways on that. The overall sentiment does get affected by what's happening in the universe, right? Like what other people are doing. But I think the bigger reason beyond really the whole sort of the surface level discussion of Elon and China is really the more important and the extremely important part, that is there enough amounts of buying interest really at price points above 40, 50,000 BTC, right? And if you really look at this bull run, I think a lot of narrative was around institutions coming. So the whole narrative was, hey, this time it's the institutions. The institutions are going to go all out. They would all hold Bitcoin in their balance sheets, and Bitcoin is going to become a big inflation hedge. And with so much of sort of extra money supply and rising inflation, everybody's going to go run towards Bitcoins. So that was kind of the narrative which was pushed also, both by the news media and a bunch of different influencers. What we did see was that story started materializing a little bit in the beginning, with MicroStrategy obviously doubling down, and then Tesla buying some. It seemed like it's coming together. That story is true. But then the Tesla reversal certainly put doubts in people's minds, where people started thinking, well, not quite sure, it's not really playing out as we thought it would. And then MicroStrategy, which was supposed to be a corporate, typical American public corporate that was going the Bitcoin route, honestly has taken a very different shape and form, where Michael Saylor has actually become a Bitcoin maxi. So now people are thinking about MicroStrategy and Michael Saylor more as an aberration rather than a rule, right? They're saying, oh, here is a convert. And sure, it's very helpful. And I'm sure he's certainly helping the market. There's no two ways on that. But he doesn't seem to be a representative sample of the larger corporate sector. It's not like everyone is going to suddenly convert into Michael Saylor, and every company which is public will start, or at least a large set of public companies would start behaving like MicroStrategy. In fact, on the contrary, I think MicroStrategy is looking more like a Bitcoin ETF slowly with their aggressive push. It's looking more like Grayscale, right? And eventually maybe that's what they should maybe do, right? So I think there's a bit of that also, in terms of where is the demand coming from, who's going to buy at those price points, and I think that we need to see. Now, of course, things can turn very quickly, as we have seen in the past. Certainly, the fall of this year or towards the end of the year, we might start seeing some new narrative or a lot of push around it, and maybe it'll actually bring it back up. Anything's possible, right? But I do feel that I think we need that. There is a vacuum at the moment. There's a narrative vacuum, right? And I also feel like I think people thought the El Salvador legal tender story might fill it, but I don't think it made any difference whatsoever. So that didn't fly. That didn't work. Good for El Salvador. I'm sure it'll be helpful to them, but I think for the larger crypto markets, it didn't even make a small dent. It was just a non-event. Question is, I don't think we need that type of narrative. We probably again need the narrative of, hey, here are corporates or funds or newer retail that is suddenly finding this interesting for whatever reason, right? Irrespective of the reason. And I think that will probably drive the market up. So I think, but as both of us are saying, we got to figure that out. Who knows how that'll pan out.
Yeah, and also interesting on narratives. We've touched this a few times. The narrative for, I'd say, all of crypto is largely driven by the Bitcoin narrative for memes or other aspects, but then Ethereum still seems to stand out with its own narrative, which is more of the future of finance, and is less about institutional buying, pushing the price up, and more about this adoption of DeFi by people who can get a better service than they could from their existing financial provider. And yeah, I think that's an interesting one. And we started to see that being, kind of reflected in the Ethereum price for a while there. But since then, the bearishness on crypto or Bitcoin has kind of pulled that back under 2000. So yeah, will we see that narrative start to fill the vacuum and perhaps be the narrative for the broader crypto market rather than the dominant kind of Bitcoin store of wealth and kind of investment, institutional adoption driving the price narrative?
Yeah, true. I think DeFi has been a powerful story. So turning to ETH is a good time to kind of look at ETH. I think the difference really is that ETH went up very sharply. There is that, of course, the meme or the analogy that's used often, right? In crypto, things go up in stairs and comes back down in escalator. But I think when it comes to ETH, if you just look at this bull run so far, and I'm not calling the end of the bull run yet, which is why I keep saying so far, we actually saw ETH go up in the escalator and come down in the escalator. Right? It didn't go up in the stairs. So if you look at here, like for example, 24th April, it was hovering around the price level that we see today, right? A little above that, 2250, but it wasn't like completely parabolic like Bitcoin. I mean, it was certainly going up, and it had gone way back up from its levels back in December of 580 or so, but still sort of it had reached about 2000 and sort of, in fact, between 1400 and 2000 stagnated a fair bit. It took a long time, in fact, in this range. And in fact, we recorded a session on this in TradingView, as you were talking about. And if our listeners want to look at it, I would recommend go look at that, because that's a more detailed treatment of what that price point looked like. But certainly it seemed like 1400 to 2000 was the right price level for ETH. But then somewhere around May, actually April, not May, the price just took off. It really went up on the escalator, green after green after green, and it went all the way up to about 4,379 or 4,380, some price point there. And then it did not stay very long above at that price point. It barely stayed 7-8 days. That's what we had seen. In fact, if you see here, right above this 3,400 mark, the price was there only for about 10 days. So only for about 10 days, the price remained in that 3,400 plus level, but very sharply corrected, right? And so over the next few days, just like it had gone up in the escalator, it came down in the escalator. Now you could say that, yeah, this probably is correlated to the whole Bitcoin crash and everything else. But it also, in other words, you could argue and say that, yes, the narrative is very strong, but ETH still seems home in that 1400 to 2000 range more than it does in the 3400 plus range, at least as it stands today. Now, it does not mean that it won't go up there. In fact, there is a lot of argument that at the current price levels, it's very discounted compared to where it can go,
Sure.
right? And all of that may have some strength and may have some validity of, in that argument, because yes, there is a lot of activity going on the ETH platform, and much of what we have seen in terms of DeFi or NFT or whatever is kind of native to ETH. Now, of course, other chains are now trying to take away some of that, but that's where most of the action was and remains, right? So in that sense, yeah, maybe it would go up, but I think my money would be that it's likely to stay in 1400 to 2000 until the broader crypto markets figure out, where the wind is, right? Like, what's the direction?
Yeah, and of course, the other big thing with Ethereum from a network level is the merge that's coming up. So where ETH2 and the current Ethereum network actually become one, and it switches to proof of stake. And there's still things being worked out there. There's quite a bit of discussion on Twitter with some of the testing that's going on their test nets and exactly how things are playing out and what potential exploits might be. So yeah, it's still a lot of that R&D and innovation on Ethereum that is still yet to come, and maybe is also adding to some of that uncertainty in the market.
Oh yeah, 100%. Also, one has to bear in mind that there are quite a few other things that were quite hyped up. For example, EIP 1559, launch of a lot of L2 solutions, the high gas prices, and we'll have to see how each one of those pan out over the next multiple weeks and months, because EIP 1559, I believe, is around the corner. Like maybe July should see it happen. We'll see whether it's already priced in or do we see something out of that. Gas prices were way up high, and people are talking about only rich people using Ethereum because everything costed $50-100 even if you wanted to do simple transfers, right? I don't know if that's still true. These days, of course, I see the reverse, where people are saying, hey, it's back to the cheap gas prices again because activity has died down. So we'll need to watch. We'll need to see how big those issues remain and how it plays out in the broader scheme of things.
Yeah, no, and EIP 1559 is on testnet now, so we should see that in mainnet in the next month or so. But yeah, as you say, the gas prices are so low again, single digits, kind of grey gas prices, that it is cheap, but that's also reflecting just a decrease in the number of transactions. So again, an on-chain metric a lot of people are looking at is how much are people transacting and at what frequency, and that is decreased, I'd say, lower than some of the usage on Ethereum earlier this year from December through to March. So we're at a higher price point, but with less usage. And the counter to that is the total value locked is still reasonably high. So it's just people are less churning through where they have allocated their capital, and are being perhaps a bit more selective or staying longer in particular positions rather than cycling through them as rapidly.
Right. No, valid point. Also, we'll see DeFi in a short bit. I think DeFi has also got a bit of a hit because multiple reasons. Well, of course, the whole market is sort of correcting, but also the yield rates are falling. And also opportunities are becoming lesser than they were a few months back, where you could have 10 different opportunities to get 100% plus yield, right? So I think that scenario is reducing down to very few and only the new ones. And then of course you fight up against, hey, are these genuine? Are these scams, or are they genuine? But for the standardized ones, the ones that have been sort of tested, if you may, or where there's a lot of traffic already in place, those seem to be going to much lower yield levels or much lower rates of earning of late, right? It could be temporary and maybe it will pick back up and there might be a DeFi summers of 2021, who knows? But I think at this very moment, it certainly is seeing a bit of correction there.
Yeah, should we jump to some of those challengers and alternatives that are trying to take some of the steam away from ETH.
Yeah. Let's look at a couple of those very quickly. Obviously, Binance Smart Chain. We recorded, by the way, another one on Binance Smart Chain as well. BNB token essentially. And so again, for our listeners, go look at that video. It's you will find that through our Twitter feed. We've posted there, and you can also find us on a TradingView. And it's essentially a TradingView idea that we have posted some analysis on BNB. The gist of really the BNB price action is there are 2-3 things to think about. One is that BNB has never seen these price levels before this bull run. These are just all new. This complete journey of going beyond about $40-45 is new for BNB. Given that, I think it's holding pretty well. It has obviously retraced a fair bit from its all-time high closer to 700. And it's down 60% plus and hovering around 290 as we speak. We can see those price points. The important piece here is really the struggle to stay neutral to bullish as much as possible. The price is really sort of around 200 MA moving average. Now this one is EMA, so you see these, it's below that, but I could actually plot that. So let me put moving average here. And just a regular moving average, right? So this is a simple moving average. And if we change it to 200, which is the long-term simplest sort of view, you see this. It's sandwiched between the regular simple moving average and the exponential moving average, and fighting very hard to stay above that. In fact, I'm seeing some memes around this on crypto Twitter where people are putting forth memes of boxing matches where the guy is getting clobbered but still sort of staying up and trying to stay in the fight. They're saying, well, that's what BNB is trying, right? Like just at least continue through. And it's true. It's just trying its best to stay above 200 and not collapse below it. So I think that's the picture there. Certainly also the 50 EMA is acting as a strong area of resistance. We haven't seen the price go up above the 50 EMA for a while now, ever since that big drop. In fact, the big drop May 19, the price has never breached above the 50 EMA. And that has become certainly a big area of resistance, and it hasn't bottomed out below the area of support that we had drawn in the past of 224. So at some level, I would say at a very high level, the price looks in some sense similar to what's happening with ETH, where it's become range bound, not completely crashed and burned, but not staying strong either, just about staying alive and trying to sort of look for a reversal if possible. And it looks like BNB is like on the same boat, more or less. So let's jump very quickly to a couple of others. We look at Sol. Solana has done a lot of push lately. I mean, they raised some additional money. Solana is slightly different. They're very institution driven. They're trying to build it and bring this whole network up more like a regular tech company. They raised a big round, and they are trying to push hard towards institutional users as well. From a price action standpoint, I think it has kept the support around roughly the $30 mark. Every time it's pulled back below that, and of course we saw a couple of weeks pulling it all the way down to even $19 and $20. But I think for the most part, it's trying hard to stay above $30. In this whole sideways movement, in some sense, if you just look at this, it is also tracking between 50 and 200 EMA, sort of sandwiched between the two and sideways. Maybe a little more volatile or relatively more volatile. But if you look at this chart and then you go back to BNB, especially the one more recent price action, it is not very different. Or for that matter, even if you go to ETH is, of course, fallen below the 200 EMA, but they're all sort of range bound. They're all range bound. They're all trying to find their next price levels. So I think Solana is staying okay. In the grand scheme of things, Solana started all the way down from like $1 or $2. And so it's still at 15x from where it was. So I think that it's still staying strong and trying to stay alive.
Yeah, I think there is also less historic data there. We've got a decent amount of data now on the actual price for Solana, but the on-chain metrics and things are still finding their feet. So it is good to see some usage of Solana, but is that just still a factor of part of the bull run and part of the marketing campaigns they're running, or is that going to be sustainable transaction volume on the network? So it's still one to watch.
Yeah, true, valid point. And I think you're right. The reality of adoption will either make it or break it, right? Because we've seen these challenges come up in the past, from Tron to EOS to what have you, and a lot of other promises from even the Definity guys at Internet Compute and others. But most of them haven't really played out, right? Most of them, despite the amount of money they had and all the promise, it's still sort of unknown. Obviously I would count Tron and EOS kind of behind us. They're done. Internet Computer has just come out, so I don't know how it will play out, but it's not really looking as promising as it was projecting, right? It still needs to play out, right? It's now on the field, but we haven't seen anything. Solana, in some sense, is on a similar boat. It's done a few things. It's going aggressively, but still too new, too early, right? So we'll see how that happens. Now, in terms of DOT, though, I do see a slight difference. And again, I'm purely looking at price action, not trying to figure out the on-chain metrics, etc. From a DOT standpoint, the market certainly seems to be more bearish as compared to towards BNB and Solana. There is no two ways on that. Firstly, the price has corrected very sharply from its all-time high of 50 down to about $15. The death cross is upon us. It is right here. In fact, probably today, tomorrow, you'll see the DOT EMA death cross. The moving average, simple moving average, probably already occurred, right? Because the EMAs are a little more, take the current data a little more weight. We have also seen that in the period when most market has been sideways, right? BNB and Solana and ETH, they've all gone just to kind of refresh, they've gone up and down, right? Solana has also gone here up and down, and even ETH has gone up and down, right? Like here up and down. If you look at DOT, it has just gone down and down, right? So we don't see much of support around any of these price points, whether it's $25 or $22 or 20 or even 17, right? And if you look at the fib retracement levels from its $1 journey, if you may, where it started, or no, this was about $6, I think. Yeah, so about $6 from where we had plotted it. It has really retraced almost 80% of it. 0.786 is where it's actually a little below 0.786. So yeah, almost 80% of the value has been pulled back. I'm not sure what's happening, but purely looking at this chart, I just feel like I think the market is very bearish on DOT, and I would not be surprised if it pulls back to its earlier area of support around $10 or so. I think $10.50 is where seems to be some strong support here, which was resistance back in the day. And it's possible if the market remains bearish, it might actually pull back to this price point. But yeah, we'll see. We'll see how that plays out. It's, again, difficult to predict in a market that is trying to find out what's next, but certainly looks more bearish.
Yeah, and from a just rough count of how much of crypto Twitter is talking about DOT or Cosmos versus Polkadot or Cosmos, or versus Solana or BNB, or even to that extent Definity, there's a lot more talk about the newer entrants. And I think there's a lot less for Polkadot. So let's see.
True. Okay, let's jump on to maybe DeFi then. Let's look at some of those.
Yeah.
So yeah, let's start with AAVE. So DeFi is getting hit quite badly. If you look at DeFi, and we have done this a few times now through our sessions last multiple weeks, it was largely range bound, right? So if you look at AAVE, of course, it started all the way from about $80, went up to $585. And then for the longest period, it has been bound between these two price points, between about 300 and 420, with the price sort of going up and down. And I think we have covered this in the past, that this has perhaps been like a good opportunity for swing traders because the price has really been respecting these price points, areas acting very strongly as areas of support and resistance. When the price went all the way up, and I think this is in tandem with ETH's jump, right? The ETH's parabolic rise, we did see AAVE also pull up, and that's when we not only saw 585, but we saw even the wicks go all the way up here, right? So maybe we should redraw this with this in mind because then it'll be more accurate, right? So here, right? So this is what it looked like. Let's see here. Yeah, so 666, right? So that's where the price pulled all the way up. We are seeing this has also pulled back 80%, right? So kind of like DOT, right? Like DOT pulled back the price 80%. Same thing has happened with AAVE, and then AAVE has also breached its area of support around 300, right? So 300 had acted as a strong area of support. Price had bounced off this a few times, actually quite a few times, right? Like we saw the price, and this was also the 0.618 fib. So it's very interesting. From its all-time high, 300 that we had seen from the prior action was also happened to be the 0.618 fib, and it was really respecting it. But then I think more recently, over the last couple of weeks, as the market has been in a sort of challenging position, it has just crashed and burnt, if you may, down to 0.786. We do see a little green candle in tandem with the rest of the markets being green, but the question is, does it stay here? Does it respect it? Or does it pull back all the way down to 80, right? Or somewhere, maybe somewhere here, like 120. So that's really the question. I'll go to SNX once because I just saw this also. SNX is in a worse situation. SNX is all the way down to about $6 range. It has almost completed its journey. In fact, SNX has pulled back over 85% of its bull run, right? And if you look at the picture here, now this is an FTX listing. So I think if we look at the SNX price from the other exchanges, the decentralized venues where it was, I think it's kind of back to where it was DeFi summers. It was about $5-6 range, and it's almost back there. So it has completed its whole journey. In fact, it has shed its entire bull run price gain. We also saw SNX being a little more volatile. Of course, it also respected certain price points, and we did see it being range bound, but it was certainly more volatile. It did not see the kind of action that AAVE saw. Also, like with AAVE or BNB or others, they saw a couple of push. So like one push, and I corrected back, and a second push, which went up like a bigger all-time high. SNX did not see that. SNX saw one push with everybody around Feb, right? This is all the Feb push. But the second push that happened around the May timeframe didn't take it all that far up. It kind of just stopped at 25. So I think certainly SNX is looking more bearish than others, for sure. That is definitely the case.
And they've got a lot more candles pushing down, lower lows being set there since middle of February. So that does seem to be a more bearish trend going back much before May.
No, that is correct. And you're right. See here, like, lower lows, it pulled it back to this that we had drawn earlier, around $14 as the area of support. And it looked like it was recovering because it bounced off this one and didn't come back and retest it. But obviously it came and retested it again during the big crash. And, that 19th, I think 18th, 19th big crash brought it back down to 14. But after that, it has really never gone that back up. It tried once to go and touch 14, but now we are like far away from this price point. From that standpoint, it's really pulled back very sharply from there. So SNX isn't looking healthy purely from a price action standpoint. And I think that at least at the moment, it looks very bearish, kind of like DOT. But as with all crypto, you don't know what tomorrow may exactly look like. But just purely from a price action standpoint, this is very bearish. We also looked at comp, by the way. We will not talk about comp here, but again, there is a video we published on TradingView, and should encourage go look at it. Comp has also pulled back a fair bit, and in fact, right now it looks like it also went through its death cross, if you may, on the EMA level, and it looks like this one is bound probably between the price points of 350 and roughly around 240, and 240 is the important test zone. So if it stays strong, it might kind of maybe push back up closer to 350. If it cannot hold the 224, I wouldn't be surprised if it starts on its journey downwards towards the $88 range.
Yeah, and this is an interesting one as well, because Circle have been making, so obviously they're behind the USDC token stablecoin, and they've been making a series of announcements of the partnership with Comp and how they're bringing that yield from Compound out to more and more kind of stablecoin holders, which is quite good during a bear market. A lot of people might be sitting on larger amounts of USDC and wanting to get a yield from it. However, both Comp and AAVE have much lower yields because there's fewer people borrowing. So exactly. I think, we might see a bit of that kind of consolidation, people adopting either AAVE or Compound more, but until those yields actually, kind of pick back up, I don't expect it to have much impact on the prices there. That's my guess.
No, I think you're spot on there. Also, see, all the margin trading markets are becoming a little weaker. The volumes are dying there, both derivatives and just spot margin-based markets. And so a lot of this borrowing also happens to go take positions across those markets, and some of that is also going down. So yeah, we'll see how those yield really plays out over the next multiple months. So that'll definitely play a big part in the puzzle. Let's look quickly at Maker as well. Maker has also pulled back very sharply, certainly still way up from where it began at about $600. So it's still, at least 3x from there. So I would say still up there, right, in a decent zone. And in fact, if you look at this, it seems like it's really around an area of value. Where it is right now seems to be an area where it has been before, and it has acted both as an area of support and an area of resistance from time to time. So I would expect it to hold. Now, of course, if it doesn't hold, it looks like it might go back down to this next level, which is around 1400. Right, so we could draw a couple of lines here. Let's just do that quickly. So one is just around where we are right now, right, at this price point. And then a second one is somewhere around here, roughly around that 1400 level, right? So if it cannot hold it, then I think it's going down to about 1400 level. Otherwise, it will attempt to stay above this, right? It will just attempt to stay above this 2000 level and see if it can go back and track things back up. So yeah, DeFi is also looking, weak, if you may. It has not died, it has not crashed and burned, but it's certainly going through a lot of selling pressure. There is no two ways on that.
Yeah, no, I definitely agree with you there. And it is, I guess, a reckoning for some of those projects if they were relying on higher prices. Although I know many of the ones that have been around since prior to the DeFi summer in 2019 have more than adequate reserves and are going to last through this. But some of the ones that joined quite late or only at the start of 2021 might be really struggling now to just kind of keep the lights on.
Yeah, also we haven't looked at the newer tokens. Obviously, we are looking at call them the majors in the DeFi world, right? But I'm pretty sure if you go down to the newer tokens in the DeFi world, they are probably feeling the pressure even more, right? Because they are the high risk, high reward type of a puzzle at this point in time, right? And when the market is turning bearish, I think people are looking at it more from a standpoint of risk rather than reward, right? So it could be the case for sure. Maybe that's something for us to follow up on. We should go and look at some of the promising new ones, right? Next time, maybe Luna or some of the other ones that came up in this bull run, saw a lot of excitement, and then see how far back have they, how far have they pulled back. Okay, let's look at, I think one last bit is NFTs, I guess. Do we just have a quick look before we wrap up today's session? Okay. So let's look at NFTs. What should we look at in terms of NFTs? Maybe we go with XE. Okay, let's look at that. Axie made some interesting news because I saw this on Twitter and I haven't verified it. So I need to go figure it out. Looks like they have created the largest Discord group ever. Like not largest Discord group in crypto, but largest Discord group ever, apparently. Okay, now I don't know how true that is, but if they have, then kudos to them. That's a huge achievement. That means they've somehow amassed a massive community, like a massive, humongous community. So it's really like kudos and congratulations to them.
Yeah, and it is a good fit. Quite often crypto projects talk about the size of their Telegram community, but for Axie's, where they're targeting gamers, right, and fanatics and fans, kind of that those people are usually more likely to be on Discord and in those communities. And typically, I'd say also one of the other metrics that's been interesting is the number of engagements, or the amount of conversation tends to be greater in those Discord communities across the multiple channels or topics that are set than Telegram, where it's just the stream of communication in some of the larger groups. So it does actually refine and potentially add more value to the people engaging on Discord. So hopefully that's sustainable for them and they can continue to grow that.
Yeah. No, that's true. And I think you make some good points there about just community and them. Okay, so here in terms of price action again, obviously the price really saw a massive run from, I think, below $1, perhaps. This was really below $1.50, and then we saw it early on, beginning of the year, the price coming up to about $1, $2, and then of course it went up to $11. So from those all-time highs, the price has certainly pulled back, and I think we covered this again quite a bit. In fact, this is when we were getting started with our own sessions. The NFT boom was really the first leg of the bull market so far, and it was more in the March-April timeframe. And then I think ever since, even before this big crash, so the big crash was May, I think even before that, we see that the price was sharply falling for Axie. So Axie, in fact, started correcting way back in April, looks like. And ever since, it's been down, and down. And right now, of course, from a fib level standpoint, it's pulled back all the way to, below 0.786 fib. Still staying above the 200 EMA, but the data point is so less. It is so new in terms of its listing on Binance. So I don't know what the broader, sort of category speaks to it or price point. But I think, yeah, it is also just trying to stay there, right? Stay positive as much as it can. And that seems to be the story. But certainly it has lost a lot of its shine from its all-time high of $11.
Yeah, and I think we'll see the same if we look at Chili's as well. Kind of a lot of hype there with the mainstream kind of adoption early around that March-April timeframe. Really unsustainable. I mean, we talked about that in one of the interviews we did with Felix Hartmann, and he's saying, it's kind of, hey, the total value of the market cap of Chili's was exceeding the brands of Man United and some of the others that it's meant to be encapsulating the fan base for. So it definitely deserved a kind of correction back down to more same prices. But Chile seems to be doing a bit better than Axie.
A little bit, yeah. Actually, well, so I just drew the fib levels, right, as you were speaking through. It seems like it is more or less the same. Of course, Axie is a little below the 0.786, but also depends on where you draw it from, right? The fib is basically a bunch of channels depending on where you start, where you end. In this case, sure, it does look like it's marginally better, but it's still roughly at the same level. It has also pulled back almost, 78% to 80% of its value. The other part is that, again, not a whole ton of data, but from a moving average standpoint, it's right now tracking below the 200 EMA. I would suspect if I drew just a simple MA, just like Binance, it's also trying to stay alive and stay above. That's my sense, but let's see. Let's make this simple moving average of 200. Oh, it's actually kind of breaches below that. But yeah, it's around that, hovering around the 200 simple moving average, and certainly feeling the pressure, right? And so it has gone all the way down from almost $1, 94, 95 cents, to right now about 23 cents. So certainly it has lost a lot of its shine as well. And that seems to be the case for most of the market. So, I wouldn't say this is something special to Chili's because Chili's did something. What we do see is that, of course, some of these NFT tokens are seeing a strong pullback, 80% pullback from its all-time highs, at least as it stands. Now, the important part, though, I think, and this is something, I don't know how you view it, Paul, but one will have to see what happens to the NFT mania or NFT craze as we enter latter part of this year. Does it continue? Does it taper down? Does it take some new shape? Because, of course, we are beyond the first hype, but there still seems to be plenty of NFT activity going on. People are still talking about NFT, buying NFTs. It may not be as much, it may not be as hyped, but it doesn't seem like it has crashed and burned. There still seems to be interest in the NFT world from what I gather from, again, the crypto Twitter world and the cryptoverse. Are you sensing that same thing, or are you seeing something different?
Yeah, no, I'm sensing similar that, there is still something about NFTs that is appealing to communities, and from both the cultural and that kind of community joint ownership or supporting creatives. There is actually some other aspects behind the narrative of NFTs that's not just about the price. And it's almost good to have some of the hype out of the way so that there's less noise, and when people are doing awesome things, that kind of cuts through, and the community can celebrate that. So I do think we'll keep seeing NFTs as also something that's bringing on more people into the crypto sphere without saying, hey, you have to buy Bitcoin or Ethereum or else you're not part of the club. There are still some people who are, either coming from art collector backgrounds or gaming backgrounds who are just going, yeah, this is something cool. I'll have one of those, and I don't need to believe the whole entire crypto narrative just to own that. So I think we'll see that in a positive light as the market keeps playing out.
Yeah, that's actually a fantastic point. And I think that that's an important part for crypto to succeed. I think it has to appeal to a broader set of people and appeal to different sets of people in different ways. So I think that's probably healthy for the cryptoverse, right? That there is a new branch now, if you may, or a new set of creatives and new set of people who found a place for themselves, right? Gamers and artists, right? Who have found this interesting niche with NFTs. Very good, very good, very cool.
Yeah. And one of the interesting kind of ideas that was born on Twitter in a discussion this morning of kind of, is the influence of crypto good or bad on art? It's kind of as a whole. And one of the things there, I'll post the link to the tweet, but was also kind of going, how does this change in terms of the timelessness of art? If all art is immutable, then do we value older arts as much as we would today in the physical world, where they need to be restored or maintained? And so, there's a lot of areas there which are yet to be fully understood, and communities kind of thinking through, how does this impact things? Even the legacy after an artist passes away has typically been something that's driven a higher price for their works, but who knows if that will hold true in the kind of NFT art space.
It's a good point. Yeah, I mean, art is its own sort of world, if you may, how it's valued, how it's preserved, right? How it's sort of seen as a cultural evolution of humankind. So, yeah, it'll be interesting to see what is the longest story for NFTs, and how does it really play into that larger space, larger narrative, larger piece around art, and not just crypto art, but art at large. But yeah, very cool. So I think all of these are good. I'm a big believer that I think DeFi, NFT, bunch of other things that is going on are actually very healthy, because it just allows the technology to flourish. Some of it will become big, some of it will evolve even more than what we know of today, and some, of course, may not see real adoption or might just fizzle off, right? Like, that's part of the story. But these are all good directions, I think. So yeah, I would tend to agree. It's good stuff. Very good.
Great. Well, yeah, definitely another interesting look at the markets there, and looking better or healthier per se on the majors, and not so bad on the challengers and alts, but really some of the DeFi and NFT segments are feeling the pain the worst. So yeah, it's good to go into the week with that perspective. And obviously this is not investment advice, but hopefully that helps everybody make sense of what's happening in the markets as a whole.
Yeah, 100%. And as we mentioned a few times, there's plenty of content. We will keep putting out more and more. Follow us on Twitter at Going Elliptic. We've got a newsletter, goingelliptic.substack.com. Subscribe to it. There's a YouTube channel. If you go to @GoingElliptic on Twitter, you will find links to it. So follow that, and subscribe us there. Subscribe to our feed there as well. And then last but not the least, like we mentioned, we've started posting some ideas on TradingView as well. So you've got plenty of those different pieces going, and hopefully you have a lot of good, useful content that you can include in your research and make some well-informed choices. But as Paul has already said, this is not investment advice. We do not recommend or suggest that you blindly follow it. Just take it and mix it with all other pieces of information that you have. And in any case, always make a well-reasoned decision. And then, of course, manage your risks, right? Don't take risks more than you can afford to lose. So, go with that mindset, and I think you will come out stronger.
Absolutely. And if there are things that you want to pose to us as questions, or particular assets you want us to chart, either on TradingView or in an upcoming episode, do message us or mention us on Twitter, and we're more than happy to do some analysis and look at that in conjunction with our community. So yeah, with that, that's another insightful episode, and we hope you've all enjoyed it, and we'll be back again roughly this time next week. Thanks, Shanky, for all of your insight as well.
Thank you, Paul, and thank you, listeners. And so for now, bye, and stay strong.
All right, take care.